hearing that and would feel positive about it, but at the same time they have in their head the detention of Mayor İmamoğlu in March and the very sharp fall in the currency that came with that. Investors were very frightened off at that time. They seem to be still hesitant to come back to Turkey, even though the currency is stabilized, even though you have very high, painfully high interest rates. What is it going to take to pull back the long-term investors?
Well, first of all, the 3-year program that we have put in place is on track, is intact, and is delivering. We have inflation which is still high, but at 40 months low. And over the past 2 weeks, there's been, again, recovery in FX reserves. Investors are actually back. Interest rates are coming down. CDS, the risk premium, has fallen significantly by well over or close to 90 basis points. So actually, if you look at the past few weeks, there's been a recovery in investor sentiment, and that's reflected in financial market conditions.
And very quickly, not so much, though we don't see it so much on the sort of longer-term money, which obviously you would feel, I would assume, more comfortable than the hot money coming in. So we still haven't seen that. Of course,
the program doesn't rely on hot money, but FDI has also picked up over the past 12 months. Turkey is a very large economy with a pretty decent infrastructure and a huge pool of talented people and significant regional integration. So, highly diversified economy. So I think when the dust settles, they will be looking at countries that are resilient to global trade fragmentation. They'll be looking at countries that would benefit from stability and prosperity in the region. I think Turkey remains the top candidate in terms of FDI inflows. And, with disinflation, predictability is improving.
Mr. Al-Gawari, we mentioned Syria. How are you continuing to support Syria? And are you thinking about investment in real estate or other areas where you can support reconstruction?
Yes. I mean, regarding Syria, I just add to the word of Excellency Mohammed, on Syria. Syria is very important. The stability of Syria for the region is extremely important, and the prosperity of the Syria is very, very important. And now we have a great opportunity with the presidency and the government in place now to really, to see stable Syria, growing Syria economically. In terms of our role for Syria, I think Syria now, they are building a country from scratch, and they will need all the help they need to, establish the country. They need energy, they need water, they need an economy, they need, infrastructure. So, us and our partners, for example, Qatar and Saudi Arabia, that we announced that we paid their areas with the World Bank. This will unlock around $180 million of support from the World Bank. Also, we're supporting them, again with our partners in Saudi and others, for example, to develop their electricity, to develop their energies. So I think Syria at this stage really needs help to establish themselves, as a country. Going forward, I think with the plans, they have in place, I think it's going to be a great economic opportunity there for investments and for really supporting the Syrian people. Syrian people are very talented. We see them, in Germany, we see them in many other places where they have, contributed significantly to the economies of these countries. So I think Syria's, growth, and development is very important for us. So this is something we are committed to do, to support them.
Just thinking about other regional investments, Kuwait is discussing converting its deposits in Egypt to investments. We saw the UAE do that last year. Is that something that Qatar is considering?
Yeah. President Sisi was in Qatar over 2 weeks ago, and we announced, again, an investment package, with Egypt. So we continue to see Egypt as a great opportunity for investments. In terms of whether to convert the deposits or, to do further investment, this is not something we have discussed, but But we
you're not discussing it.
No, it's an option, but it's not something we're gonna. It's one of the options. But in reality, what we see is Egypt is a great, has great opportunities in the real estate, in the tourism sectors, in the manufacturing, and I think, from an investment point of view, if we are to do an investment, it has to be in a purely commercial basis with a good return. So this is what, look. But again, the relationship with Egypt, it's very significant, and we view Egypt as a great, a great potential for growth, in the future.
Mr. Ali Ibrahim, the big shift for the kingdom last year was that you became a capital importer, not an exporter, which reflects some of the investments that you were talking about in your other answer. But it does mean you need to attract stable funding, and last year we saw another fall in foreign direct investment. So why is it, do you think, that the FDI is falling, and how are you going to get back on track for that?
So, Stephanie, maybe I'll just take a step back and talk about the GCC a little bit overall, and I think tie that to your earlier question. The GCC countries' non-oil economies have grown 3.7% in 2024. That's almost double global growth. And if you look at each country's transformation, there's an acknowledgement that we've been for a while operating below our potential, which means that's operating at a loss, and that loss, maybe in earlier generations can accept that loss in the short term, but compounded, is not good for future generations. And that's why I think the Kingdom of Saudi Arabia, Saudi Vision 2030, and other countries in the region have taken it upon themselves to restructure long term. And because of that, the number of opportunities will only keep growing. We're not just moving from consumption to complexity and production and innovation and exports. We're also attracting capital that will help us do that because of the opportunity, and attracting talent at the same time. If you look at what's happening globally, let's say what's happening with US trade policy and its impact, we believe that this is ultimately going to lead to two things. One, we've always talked about what the new form of globalization will look like. Today that answer has been brought forward. Now we can actually start shaping what the world will look like in terms of trade. And number two, the global economy is only as strong as its weakest link. And we've seen in multilateral platforms where His Excellency also participates with other countries in the region, that there's been growing, I'd say, drag on the global economy coming from weak links. I think the response to these policies will only create stronger global players, stronger global economies, from emerging to Europe to whatnot. If you look at things such as the Corporate Sustainability Due Diligence Directive that the EU announced, and how that was a little bit revised recently because of the impact that would have had on the European economy. Some GC companies today are divesting because of that, and we think that still needs to be revisited. I'll come back to your question. Foreign direct investment is a long-term game. It's flows and stock. In the kingdom, we're seeing signals of not just the actual number, but the number of licenses, the number of people coming into the kingdom, number of headquarters being set up, the number of deals that are being discussed and negotiated. In 1 year, we had a very large deal that helped spike that figure and then was challenging afterwards. But our target remains the same, 5.7% of GDP in 2030, around 100 billion in terms of flow in 2030. And we're working hard, 900 reforms to create a better business environment and continuously evolving.
Minister, one of the things that was a challenge, we talk about the weakest link. One of the problems for Turkey was the unorthodox monetary policy for a period of time. Now, my colleagues tell me you're the keeper of the flame for orthodox monetary policy. But it's painful at the moment. You have high interest rates to bring down inflation. Do you worry about the impact on the domestic economy of that? And is it sustainable? Are you going to have to do something to support consumers or raise the minimum wage potentially ahead of time?
Well, it's... Oh, sorry.